In March 2020, the United States did something extraordinary. In just a few months, the Federal Reserve created more dollars than existed in the entire first 200 years of American history. $4 trillion, conjured into existence with keystrokes. Stock markets soared, housing prices exploded, the wealthy got wealthier. And then something predictable happened. Inflation hit. But here's the twist. It didn't just hit Americans. A farmer in Kenya saw food prices spike. A factory worker in Vietnam watched their savings lose value. A family in Egypt struggled to afford bread. They didn't get stimulus checks. Their governments didn't print money, but they paid the price anyway. This is the hidden tax that nobody talks about. When America prints money, the whole world foots the bill. And today, we're exposing the most powerful economic weapon ever created. Dollar hegemony, and why it might be the greatest scam in modern history. The ultimate superpower. Let's start with a simple question. Why can the United States print trillions of dollars without collapsing like Zimbabwe or Venezuela? The answer lies in something economists call exorbitant privilege, a term coined by French Finance Minister Valéry Giscard d'Estaing in the 1960s. He was complaining about something that still makes the rest of the world furious: America's unique ability to pay its debts in a currency it can print at will. Here's how absurd this is. Imagine you had a credit card with no limit, and you could legally print the money to pay it off. That's essentially what the US dollar system gives America. But the magic trick only works because of one critical fact. The dollar isn't just America's currency, it's the world's currency. Approximately 60% of global foreign exchange reserves are held in dollars. About 88% of all international transactions involve the dollar on at least one side of the trade. Oil, the most traded commodity on Earth, is priced in dollars. When Japan buys oil from Saudi Arabia, they transact in dollars, not yen or reals. This creates a permanent, structural demand for dollars that no other currency enjoys. And that demand is what allows America to play by different rules. How America broke its promise. In 1944, after World War II, 44 countries gathered in Bretton Woods to redesign the global monetary system. The deal was simple. The dollar would be backed by gold at $35 per ounce, and every other currency would peg to the dollar. Why? Because America held 2/3 of the world's gold and had the only major economy untouched by war. This worked beautifully until the 1960s. The Vietnam War was expensive. Dollars flooded the world while Fort Knox stayed the same size. France got nervous and started demanding gold back. They literally sent warships to New York to collect physical bars. The math was clear. If every country demanded their gold, America would run out. So on August 15, 1971, President Nixon went on TV and temporarily suspended dollar-to-gold conversion. Temporary, of course, meant permanent. America essentially told the world, remember that promise to exchange your dollars for gold? We're breaking it. The world had no choice but to accept it. By 1971, global trade was so integrated with the dollar that abandoning it would mean economic chaos. The system had become too big to fail. The petrodollar masterstroke. But Nixon needed something to replace gold. The solution? Oil. In 1974, the US struck a deal with Saudi Arabia. Saudi would price all oil in dollars and only accept dollars as payment. In exchange, America would provide military protection and weapons. This created the petrodollar system. Now every country that needed oil needed dollars first. Since every industrial economy runs on oil, this meant permanent global demand for dollars. The genius was simple. America could import oil by printing money, while other countries had to export actual goods to earn the dollars needed to buy that same oil, the hidden tax. This brings us to the mechanism of how America exports inflation to the rest of the world. When the Federal Reserve prints money, it doesn't just affect Americans. Because the dollar is the global reserve currency, that new money dilutes the value of every dollar held anywhere on Earth. A central bank in Thailand holds dollar reserves to stabilize their currency. When the Fed prints, those reserves lose purchasing power. Thailand just got poorer, and they had no say in the decision. An exporter in Bangladesh gets paid in dollars for garments sold to American retailers. By the time they convert those dollars to local currency, inflation has eaten into their profit. They worked, America printed, they lost value. This is the hidden tax. It's not called a tax. There's no legislation. But the effect is the same: wealth quietly transferred from the rest of the world to the United States. Economists estimate that dollar dominance saves the US government hundreds of billions of dollars annually in borrowing costs, because foreign demand for treasury bonds keeps interest rates artificially low. That's hundreds of billions that would otherwise have to come from American taxpayers, instead extracted from the global economy. The 2008 crisis and COVID money bomb. Nothing illustrates this dynamic better than recent crises. In 2008, American banks made reckless bets. The housing bubble burst. The solution? The Federal Reserve printed $3.5 trillion through quantitative easing. Did this cause hyperinflation in America? No, because much of that money flowed overseas, absorbed by global demand for dollars. Emerging markets like Brazil, Turkey, and India experienced currency crises not because of anything they did wrong, but because of American monetary policy spillover. Then came 2020. The Fed's balance sheet expanded by $5 trillion in just 2 years. Congress approved trillions more in stimulus. The dollar didn't collapse. But inflation came, and it came everywhere. Countries worldwide experienced surging food and energy prices. Sri Lanka's government collapsed. Pakistan faced crisis. Egypt needed an IMF bailout. America printed, the world paid. The weapon dollar dominance isn't just about economics. It's the most powerful geopolitical weapon ever created. The US controls the global financial infrastructure. SWIFT, the messaging system banks use for international transfers, is based in Belgium, but effectively controlled by US and European interests. When the US wants to punish a country, it doesn't need to invade. It just cuts them off from the dollar system. Iran has been essentially locked out of the global financial system through sanctions. Their oil exports collapsed not because they ran out of oil, but because buyers couldn't pay them in dollars and banks refused to process transactions. Russia faced similar treatment after invading Ukraine. The US and allies froze hundreds of billions in Russian central bank reserves, money Russia thought was safely stored in Western financial institutions. This sent shockwaves through the world. If the US could freeze Russia's reserves, a nuclear power and major economy, they could freeze anyone's reserves. Suddenly, holding dollars wasn't just an economic decision, it was a political vulnerability. The rebellion today, cracks in dollar dominance are showing. China and Russia conduct bilateral trade in their own currencies, bypassing dollars. Saudi Arabia, America's oldest petrodollar ally, has discussed accepting yuan for oil. The UAE settles some trade with India in rupees. Central banks worldwide are buying gold at the fastest pace in decades, reducing dollar exposure. But here's the problem. There's no alternative ready to replace the dollar. The euro? Politically fragmented. The yuan? China's capital controls make it untrustworthy. Gold? Impractical for modern commerce. Bitcoin? Too volatile. The dollar remains dominant, not because countries love it, but because the alternatives are worse. This is the dollar trap. Countries are locked into a system they resent but can't escape. The bottom line. The ability to print the world's reserve currency is the most powerful economic advantage any nation has ever possessed. It allows America to run massive trade deficits indefinitely, borrow at artificially low rates, and sanction rivals without firing a shot. And it exports the consequences of American policy mistakes to the rest of the world. For 50 years since Nixon closed the gold window, America has been writing checks backed by nothing more than trust, military power, and the absence of alternatives. The rest of the world has been cashing those checks and absorbing the inflation. Every time America prints, the world pays. And eventually, every bill comes due. If this changed how you see the global economy, hit that like button and drop a comment. Do you think the dollar will still be king in 20 years? This has been your crash course in how money really works. Thanks for watching, and I'll see you in the next one.